Happy Monday, everyone. If you can see that presentation up there all right. And we're going to get this done. It's a good start to the markets this week. Just looking over my tickers here. Strong day for the yen. What a year for the yen this year. Gold giving a bit back, record high on Friday. Pretty quiet how that hit a record high. Futures and stocks flat. Not too much happening in the bond market, but yields lower again. And I think there's a bit of a tell there. We're going to talk in this webinar towards the end of it about what's happening in markets. Happy to take a lot of questions, talk about what's happening in markets now. I'm happy that this is on a quieter day in markets. You look at the calendar this week, not too much happening in the US until Thursday with Jackson Hole. So maybe we get a few quiet days here, which I would kind of like to catch up on some things or to have a little chance to kind of digest everything that's happened just here in August. Think about it. Happy Monday, everyone. Hope you can hear me all right, see me all right. Get the chat open here. All right. Well, I don't know if we hit the Q&A. Got that down here so I can see that in the webinar chat. So at the chat, we have a chat and a Q&A, I guess two different things. So yeah, the market's back open. And it's going to be a kind of rock and roll finish to the year. A lot of election stuff to come, a lot of politics, geopolitics, wars, a lot of the unexpected. So, just kind of a thrilling market. Bit of a tough one this month to really get your head around, and intense volatility. And that's kind of the topic of this webinar, right? We're talking about these trading traps, but in order to make money in financial markets, you need to not lose money, right? And that is really, if you stay in the game long enough and you don't lose money, you're going to make money. I mean, the whole point of financial markets is making money. That's the capital formation, why people start businesses, why you're investing in businesses. It's the goal of all governments to have GDP growth, which is going to help a currency. Of course, that might be a relative trade with someone else doing even better. But, you're mostly investing in things that you like or things that are doing well or obvious places where things are struggling. And if you do that and you don't blow up, you compound a series of bad decisions, then you're going to do well in financial markets. And a lot of this advice is going to be reminders and things you just need to hear, things I repeat to myself over and over that help me out. I can't trade for you. I can't tell you exactly what's going to work for you, but I can tell you what's worked for me and what is working for me and has for many years now. And what makes it hard. And I think that's what a lot of people need to hear. Not, you can go to a million webinars where someone's going to tell you this is easy, buy my system. Like, I'm not selling anything here. And I'm going to tell you that it's not that easy, but there are things that you can avoid that will make it a little bit easier. And it's one step at a time. And hopefully this is a step in the right direction for you. So I guess we could talk a little bit about me, as much as I hate to see my pictures on these things. I lived in Montreal, Toronto the last 20 years. I trade headlines. You can see what I do at Forex Live if you're coming to this webinar from Forex Live. Well, I write about everything that's happening in the world in real time every day. And I've written upwards of 20,000 articles at Forex Live documenting markets in real time, what's happening and why. And that's what I trade on. Of course, you have to manage risk with technicals, but I'm almost entirely a fundamental trader and looking for things that are changing in the world and how to change them quickly. When I got into this business, you could just trade headlines in the simplest way. If non-farm payrolls was strong, you could sell bond futures and they would go up. Like, the algos hadn't taken over markets yet, and you could just be a little bit faster than the next guy in figuring out what things meant. So if you had access to news and you could think through things quickly, you could make a lot of money. And the guy, who was my mentor, he was making $100,000 a day routinely. Still a good friend of mine, still in markets, but it's changed, and the game is always going to change, and you have to change with it. And now, you're waiting for a little bit more unexpected news to make those the algos aren't trading on, geopolitics or news that's not coming through a news wire or in a traditional way in terms of economic data, where you have to think about it in sort of the second order level of thinking. But that's what we do now, and what I really enjoy doing. So let's get on with it. Enough about me. Happy to take questions about me if you really want to hear, but I doubt you do. And it's sort of the number one message of this webinar is you just have to stay in the game. Like the game, it is a wonderful place, aside from all the financial stuff. It's a wonderful place for personal development, for understanding the world. And I think these are the things that I find most rewarding about it. It's a very humbling place to be in financial markets. And there's a scorecard. I mean, everybody likes to be right or think they're right. But the market often tells you that you're wrong, or that you're thinking about things wrong, or that you've made a mistake. And that is sort of repeatedly humbling. There's this sort of image of someone who trades successfully, and that's what I do, as this very arrogant, confident, ultra self-assured person. That's probably true in the world of business, but in the world of trading, it's not. I know a lot of successful traders, and they're all humble because they've been humbled so many times. And the thing is, they know all this, that they're going to be wrong so many times. They know how to stay in the game and how to be wrong and not for it to be fatal, or how to be wrong once and not 10 times in a row, or to let compounding bad decisions get to you. And that's how you have to recognize these pitfalls and go from there. A lot of it is about emotions, right? And so these things you've heard before, you'll hear again, is you have to take care of yourself. So much of setting yourself up for success is, not doing drugs or alcohol, getting enough sleep, having a routine about when you're in front of your computers, or I talk a lot about even checklists in decision making. I have a video on that, if you search for Pilot on our YouTube channel, please subscribe to that. It talks about using checklists to make trades, and that routine around something like that, which is used in aviation, so planes don't crash. And that's sort of what you are, as a plane flying slowly through the air, or quickly, I guess, safely anyway, and not making a crash landing because you forgot to put down the landing gear, or made some other silly decision that a pilot who had done it 5,000 times would never do. But one bad mistake can compound, and many bad mistakes will undo you in financial markets. Anyway, we have, this goes a little bit all over the place, but we have 7 of these common trading traps, and I'm going to talk about just ways to avoid them. And the first one, it couldn't be more simple, and this one just irks me, and it's a little bit out of left field, but is distrusting your broker. And I just think it's the most bizarre thing. We hear so much from people who are like, I have this problem with my broker, Adam, can you help me? And it's usually like, I don't deal with brokers, so I can't help you. And I don't know what's going on. But I hear these terrible stories all the time. And I'm out there thinking, why are you trading with this broker at all? And just take a step back and say, do you trust your broker? And if you're just new to this, which you might be, why are you with this broker? And I think one of the easiest things you can do is just take money out of your account. If I set up an account, first thing I'll do is add money to it, or get it all set up, all the KYC and all that, and then add some money, and then take some out, or take it all out. And if you, number one, if there's any snags in that process whatsoever, get out of there. There's a zillion brokers. We got a whole listing on our website. Check it out. Find someone that fits for you, then that you trust. I mean, don't look, be careful with incentives. There is often no free lunch. Look for tools, but a lot of the best tools aren't going to be with your broker. You can find good charting elsewhere. You can find the best news at Forex Live. I'm happy to talk about tools in another webinar, but you have to trust it. And with that, take money out of your account. And that feeling of taking it out is one that you should be thinking about. I take money out of my account every single month. And it's like a payday, right? And that's basically how I get paid, is just taking money out of my broker. Sometimes twice a month. My wife gets a little out of hand on the spending. but we're doing well, and that's part of what you expect to be doing in the future. So make sure there are no snags, and make sure that you're not getting weird phone calls from your broker telling you to put more money in every time you take money out. And just trust it. Like, that is the easiest thing you can set up, and because a lot of what we're going to get to is around trust and is around getting yourself in the right frame of mind. And so you have to distrust. There aren't that many good people out there giving you good advice. Even people when their heart's in a good place are often just talking for influence or to get clout. There are a lot of people trying to sell you something because it's way easier to rip people off than to help people. And the people who are attracted to the financial industry or the crypto industry, a lot of them, I would say the vast majority of them, aren't there to help you. They're there to make money themselves. And the easiest way to make money for themselves is to get your money. So you do have to be somewhat distrustful. And if I trust in the places you can, and you found us, so that's a good start. And this sort of goes along with it is number two is paranoia. Is such a trap, and I find it disheartening when people are ultra paranoid about why things are happening, right? So you can go back to your broker and say, oh, my broker is trading against me, and that is why I'm losing. Well, first of all, get rid of the broker if you don't trust them. Second of all, you're probably being a little bit paranoid. So you have to recognize these sort of traps around and these feelings around paranoia. And it often sets in when everybody's been through this, where you make 5 or 6 or 10 bad trades in a row. And you start to think, like, why is this happening? Am I getting bad advice from somewhere? Or is the broker thing, or something in the world, or something about me? And you get very paranoid that the world's sort of working against you. And if you feel yourself in that, and you have to be able to step back and say, listen, nobody's going after my small account. Maybe if you're a hedge fund whale, and these guys are probably understandably paranoid because they might have billions in a single position, and somebody might be trying to squeeze them. And they're probably understandably paranoid about who knows what they own, and they try to protect their positions and hide their positions and whatnot, but nobody's squeezing you. That kind of paranoia is very counterproductive. And if you see yourself feeling that way, find a way not to feel like that again. And you just have to know what paranoia is and how to avoid it. And I think it comes along with the same sort of tip is really, and this is really what I like about markets in general, is that personal development that we talk about. And if you fall into these pitfalls enough, and every trader does, that you get to understanding your emotions or feeling like, and it's even the euphoria side. When you're walking around the neighborhood thinking about a house you want to buy, the biggest house on the street, or driving through a neighborhood, or going past a car dealership thinking, wow, with all the money I just made, I'm going to, a few more days of this, we're going to do that. Or that's a bit of euphoria, right? And you're really confident at that moment. So you basically have no doubt in whatever it is you're doing or what's been working for you. But that is a sign that you're in a bad mental space, or you're not on guard. And to me, that personally is the hardest one to manage right now, because when you get it, everything seems aligned, and it still feels like it's like the third inning, or you're halfway through the trade. But more often than not, you're almost at the end, and it's time to start getting out, and it probably maybe hasn't run as fast as you hoped it would, or as far as you think it will, but it's probably time to scale back. And it's the same thing on both sides. Catching falling knives when things are going badly, or doubling down, all these sort of emotions around fear and greed and FOMO, and whatever's happening in the world, is sort of doomsaying that is really, really prevalent right now. And I think that is a huge industry in itself. Forex Live, we started around the same time as Zero Hedge. And, they built this huge brand on just selling doom. And it's incredible. You start, the market's gone up 9x, and they're sort of since the bottom, since 2008 anyway. And all they've done is sell doom, and all they've done is grow. And if you're selling optimism, nobody's buying and nobody's reading, and it doesn't work. Doom, I've shorted companies to zero. So I'm not saying it can't work, but I have not seen many bears make money. And if you see all the sort of famous bears and you look at their returns, like even people talking about Michael Burry right now, or the people who shorted housing, like they are all one-trick ponies. Like it didn't, Meredith Whitney, who bet against Citi in the financial crisis, any of them. It doesn't work over and over again, yet people love to turn to the doomsayers and listen to what they have to say. And that's fine to listen to what they have to say, but being negative and betting against humanity is a losing bet. The markets do go up, and it's a tough mental angle to hold. And it's really, if you step back and think about it, it's not the person you want to be is doomsaying on everything. It'll get you attention. People are happy to put you on TV. I know that, but it's not, it doesn't make money. So the next one is blaming others. And this is false. It's a trap, right? These are all traps. If you put all of your money, you can have someone else manage money for you, and that's fine. But if you're doing it yourself, you're doing it. You might read what I write or what someone else writes, and you might want to follow them. And I read a lot of people and get a lot of ideas from a lot of different places, like everyone does. But to go with every word everyone else says and not realizing that you're the one making the decision. And I think we all realize why we do this. It's so much easier to blame someone else, right? Like I don't go out and publish signals or whatever, like Forex Signals is a big business, because I really don't believe someone can follow it with enough conviction that when things don't get bad, they're not going to puke it out or bail at a tough time. And so, when you're trading or when I'm trading, whoever is the person hitting the button in your account is the one who's responsible. And that's you. So whether it's the leverage, which is almost always too high, you have to take responsibility. And that's part of sort of these traps. Once you take responsibility, everything hits harder. Right? So all that fear and greed and paranoia and all these other traps, they hit harder when it's you on the line, because now your ego is involved, right? But it's really not that bad if you can take responsibility. Again, you get these benefits of growing as a person. And then when you have success, it's your success, your family's success. It's something you can teach to your kids or whatever. But this taking responsibility is often probably the hardest thing. And blaming others is a bit of a crutch. And you'll always, if somebody gives you like wrong facts or puts you in a wrong position, it's very annoying, and it's natural to be angry at others. It doesn't mean you can't dislike them or be upset with them, but to blame them for your choices, I think is just a trap. But it also comes with sort of just following others blindly. It's sort of a trap. Like there is nobody out there with all the answers. Everybody searches for this person that will tell you. And if there is one person who you do want to follow, it's the Fed, right? Jerome Powell or whatever other central bank. They're telling you where they're going and not fighting the Fed and going with what they say. Even when they're wrong, like markets will follow where they're headed. And you can certainly lean against what they're doing if you think they're going to be late or early, but they're going to get there. Whether it's in fighting inflation and I think now reacting to lower inflation. The Fed is always behind the curve. And if you can just be a little bit ahead of that, but following where they're going or going to where they're going, but certainly never fighting dead against them. We just had speaking of news, we just had comments crossing from Waller, which was like the highlight of the day. It was supposed to be Waller today from the Federal Reserve governor, and there's no comments at all from him. So today really is turning into a dud. Next, and this one I think it's a trap, and it's maybe the hardest one, is not recognizing how hard it is. I've been doing this for 15 years, and a lot of days I'm just looking to the finish line. It's gone well, and I'm not going to do this forever because it's painful. And a lot of people will tell you it's easy, just do this, buy on this when this moving average crosses, or, follow this, get all hyped up and leveraged up and make a trade, and maybe it'll make money. But in my experience, and the successful people I know, it's not easy. It's challenging, and it's interesting. And it is ultimately fulfilling, but it's extremely painful. Take NVIDIA, right? The best company now, I guess, in, decades. The run in that, and even just the last little bit is instructive. Yeah, it's up, 100x. But having seen the drawdowns that go along with that, and the pain that goes with being involved, especially if you're in size and something like that, watching it swing 30%, even the last few weeks, is extremely easy to get shaken out of. And so know that even in the very best of the best of trades, in that instance, you still have to tolerate 30% swing. And now if you're leveraged, that could be easily 60% or wipe you out. So there's a mental model around trading that if you are going to get into a trade that you plan to be in for any length of time, anticipate pain. Anticipate that this is going to be hard, not that it's going to be easy. Now you're thinking about the finish line, right? When NVIDIA gets to 140 or whatever it's risen to, 1400 pre-split, that's what part of what's driving you to get in the trade. Obviously, the sort of greed of that, or the profits. But before you ever get into a trade, visualize the pain that you're going to have to go through. Say to yourself, I might be a year early in this trade, and can I tolerate being wrong for a year or a month or a day or whatever? And how much can I tolerate being wrong? For me, there's obviously going to be stop levels, which you can manage that risk with, but you also need to have stops around the fundamental side of it, thinking, maybe everyone's not as mispositioned, or the market's not as wrong. And you're watching headlines, and I often find that's a barometer. If something rises on bad news, well, that's a pretty strong market if it rises anyway. Or if you get some really good news, presumably for, say it's a stock that has great earnings, and it doesn't go up. And then you think, wow, that everybody's already in, it's late. And it can be the same with economic data. So you get that measure of something all the time, that can tell you where we're at in the cycle. Recently, strong retail sales, and dollar hasn't quite responded the way you thought. It did initially, right? Last week, strong retail sales, Walmart pretty upbeat, US dollar initially jumps, and then it fades, right? Against cable, it faded pretty quickly. It's taken a bit longer on some other fronts, and that makes you think, where are we here in the dollar? And so that is the kind of thing that you have to have conviction to either see through or to go with, and you got to anticipate that. So yeah, I could do a whole webinar on anticipating future pain and how important it is to maintain conviction. And then to go along with that is impatience. God, I hate these slides with my picture on them. It speaks for itself in a lot of ways, but I'll put up this Warren Buffett quote, and it's such a good one, and I find it to be true over and over again, is that markets will give you opportunities, and you don't have to take them all, and you don't have to, also to go with that, you don't have to lament all the good pitches that you missed, all the opportunities you had that got away. There are going to be more. This August is such a good example. Like, a lot of crazy moves happened. I don't know if anyone saw them coming. Like, I was pretty bearish myself, and you can go back and read that. Everything I write's on the page. And long bonds, and that certainly worked. I've never been longer bonds. But how it all unfolded was very difficult. And then the bounce back, how aggressive it was. Again, you know, I've talked about how the Fed put was working, but it was all very tough to digest and get your head around and understand how much was in the carry trade, how much might have been left. And you could have been a day early on betting against some of those moves and got blown out. You know, 2 weeks, it's only 2 weeks ago on Monday where everything felt like it was imploding at this time. And now we're all back to, you know, la-di-da-di. And that is not necessarily a pitch that you needed to hit. Great if you did. I mean, I felt like I was on top of it, but still, that was a challenging one. Maybe some will be better, and they certainly will be if you just wait. So, you know, time is on your side. Like I said at the start, stay in the game, and you'll get there. And then what goes along with that, and I think this is the most true thing, is nobody does the work. Like, they really, really don't. And it shocks to me. Anyway, I'll show this clip here. I don't know if it'll play, but this was let's see if this actually plays. It's a skit from a Canadian show, and it kind of goes with that image I had there. I don't know if it'll play through the slide, but we'll give it a shot. It's only 25 seconds long anyway.
What's up? Oh, good job. Got it. One more time, you're out of your ass. When costly, can start speaking. Got me off guards. Hey guys, we get them the hell out of here. In there, what?
Anyway, that always cracks me up if you could hear it. It was just a guy falling asleep in the pavement at work. And, you know, there's so many guys. Listen, you would not believe. Actually, let's skip ahead. Probably read this while I'm writing. Is Jim Rogers is a commodity investor and one of the best ever. And he's probably not in the game anymore. But and he argued that nobody did the work. And I saw something the other day from Goldman Sachs, or someone talking about Goldman Sachs, and it was how their HR department didn't share with the economists or the stock market analysts how many people had read their reports or downloaded their reports when they email it out or open the email. And they didn't because it would be so disheartening to them to see how few people read what they were writing. And I believe this to be 100% true. I'm on every Fed speech. And you can have sometimes live streams, like exclusive live streams on YouTube of a Fed speech, and somewhat important one. And you'll see 150, 200 people on there in the whole world. And you can see the Fed streams, like nobody is on it. Now, that might be on TV and people are watching the wires. So it's not entirely accurate how many people are watching. But you also look at research notes or who's reading what, and so few people are doing the work. And it's just the easiest edge out there. And I think the edge that goes with it is knowing that the other people aren't doing the work. Like, there is alpha here, whether it's like equity research notes or economics research notes, or digging into something that you are interested in, which is the easiest way to stay focused. There is a really, really, and I believe more and more every day, a superpower in actually just paying attention. And not getting caught up in like this distracted world that we're in. Now, in some ways, the momentum trade has really worked, right? Because there are obviously people doing work on NVIDIA, Microsoft, Amazon, you know, the Mag 7 stocks. And that's pulled money in a way that has created these crazy momentum trades as people's focus does sort of shift from thing to thing. And that is maybe that's the game you want to play. But I think a different game is focusing on things that really nobody else is watching, and a lot of those are surprisingly big. I mean, you're not going to be the only person who is in on the trade, but you can be early, and you can do the work, and it is really, really worth it to do it. And know that if you are doing it, you're in a very, very small minority that even bothers to read on what's happening. So, the flip side of these things, not what not to do is what to do. So sort of a recap on those. And we're going to take some questions soon. So you can pop those into the Q&A or the chat or whatever. I can see those. Is, what you want to do. And if you can do these things, then you're going to have success. And just don't blow up and stay in the game. And there's just like a lot. And remember that markets are there. Like, there's so many people who blow up because they don't really believe that it's going to work. And I think a lot of success in this business is recognizing, like, if you're in this, you're in the right place. And if you're doing the work, it's worthwhile work and you will be rewarded for it. Maybe taking money from the market feels like stealing, or maybe you don't feel deserving at your core, and there's all these this psychological game that goes along with markets, but you're in the right place, you're doing the right thing, and you will have success, and believe those things, and it ultimately turns out to be true. And along with that, I'm going to repeat something I say pretty frequently, probably not even enough though, is that there is always another trade, and it goes back to some of those points I was making before. But remember that, say you missed this August move, everything about it, or just got a little taste of it, it doesn't matter. There's always going to be another trade. There's a lot of confusing cross currents right now. There's going to be a U.S. election, which is a ton of noise, often doesn't mean anything. You just wait for that everything to align, and that's fine. Like, time is on your side. Warren Buffett didn't really get rich until his 50s. He's, the top 5 richest guy in the world right now. So time will work for you if you just remind yourself every time you miss a trade. And I've spent years setting up a trade and then missed it. And it's super painful, awful. But you remind myself, listen, there's something else. And even now, like, I have 2 years, 3 years outlined in things that I want to be in. And recognize I'm going to miss some of those because I'm too early and get shaken out, or I'm too late. And that it is what it is. If you could hit all those, you'd be making 100%, 200, 500% every year. And nobody does that. Because they're wrong sometimes. Or early, get shaken out, or all the weaknesses that everybody suffers. So, got a little what's holding back your trading success. All right, nice little survey there. Yeah, all right. Well, I can't vote. I can't, but you feel free to vote on that. That's a pretty cool question. I'm getting a question in there now. Happy to get more questions. I'll get to those in a second. And then, I really do think that there is another trade. It's sort of the answer to every problem. When you're feeling it, when you're fighting it, repeat that to yourself, and it works for me anyway. Practical skills, and I think some of these stuffs are pretty important as well. I mean, we talked about a lot of the mental side of it, but you also have to prepare, right? And some of that's understanding what you're trading, the leverage that you're trading, the risks around what you're trading, what's available to trade. A lot of when you're trading headlines is just like weird things happening in the world. Okay, why did nickel spike today? Well, there was an island in the South Pacific that's 8% of the world's nickel supply. Might have a coup there. Maybe that's tradable. But, you need to be able to know how to trade nickel beforehand. And that's maybe not something you're familiar with. And maybe you don't want to do that first trade at a time like that, right? So cast a wide net. I do believe in casting a wide net. And then, again, that last point there is a pretty important one, is don't overcomplicate. You hate to be like long bonds right now, which has been a wonderful trade this month, and have done it in some sort of synthetic, option-oriented way that depended on certain bonds doing well, and then the whole trade actually doesn't work at a time when all bonds are rallying. And you think to yourself, why did I overcomplicate that? Why didn't I just buy TLT or just vanilla 10s or something like that? to make it work. There's probably less leverage around that and more easily identifiable risks. But ultimately, when you're right, you need to be right, or it leads you down some of those other traps that you get FOMO or revenge trading or whatever. Yeah, great to see some questions popping in there. I'll just zip through this, and I'd rather talk about these questions anyway. But we talk about a little bit of fundamentals. I'm saying don't be a bear here, there, and a lot of like the news can shake you out a lot, and I think this is what people find hard about the news. I mean, there's something just so valuable in believing in a trend and then like shutting off the world and being right, because it stinks to believe in something and then you read, if you're reading, you're gonna hear someone who's pretty compelling that tells you you're wrong, and then it kind of weakens your conviction. Then it goes down 30%. You get shaken out at the worst possible time. But that's a muscle you need to strengthen, and recognize the true game changers in the economic news or whatever are quite rare. And, the trends that tend to continue, especially in the currency market. Okay, I see some. I'm not going to spend too much time on this. I'll talk about a few things that I still like in the market. The top one, conviction is a little less on that. It was interesting, like I talked about with retail sales and the dollar. I think other central banks ultimately cut quicker than the Fed, and the carry trade is still on in terms of the yen. But I just wrote about that this morning. Some inbound M&A into Japan. So the biggest M&A deal ever potentially from someone from outside buying a Japanese company, which is what you would do when the currency was very low, like the vultures circling, which is what I wrote. But that could be a sign that we're in the late innings and sort of the weak yen. Obviously today's price action as well. Gold is a really nice trade. I see someone asking about gold here right now, and I get a lot of calls about gold. I was talking with Kitco on Friday, so maybe you'll see something there if I post it up later. But he had a record on Friday, and he didn't even nobody even noticed. See, there were no headlines on CNBC. Big round number too, hitting 2,500. You have China buying, higher import quotas for China, which is physical import quotas. And it seemed like it was investor demand, not jewelry. But, China's buying. Obviously, a lot of the world is trying to get away from U.S. dollars, and there's just a secular trend there. When the U.S. dollar starts going down, it will be supercharged. Now, that might be a couple years away, but just how we've gotten here in such a quiet way. When you have everyone all the time talking about a bull market in something, it's a bit of a red flag, very big red flag. And we're not there with gold, even though we're at levels, I think, a couple years ago. If you're talking about $2,500 gold, a year ago, it sounded a little bit loopy, but it's gotten here without a lot of fanfare. Inflation coming down. I talked about being long bonds. Central banks behind the curve for sure, which is going to make everything overshoot. We're still in a deflationary world. And then what I'm looking forward to in the election is these fiscal levers. And I think people don't understand how, the U.S. dollar is doing really well, and a lot of it is debt fueled. U.S. is running a deficit at 7% of GDP. And a lot of other places have fiscal problems too, but they're not running deficits like that, not right now. And the U.S. could presumably do it for the rest of the decade, and I don't think it's going to cause problems in the bond market. It'll sell a lot of, articles at different places that have been doing the same thing for 20 years, talking about the U.S. fiscal collapse. Maybe one day that does come, but I think they can continue to do it. But they shouldn't continue to do it, and they probably will reel it back in, and then you get a U.S. growth hiccup and a dollar drop. But that will depend on the composition of Congress and the priorities coming out of the U.S. election. So that is really where I'm thinking about right now and watching closely. All right, questions, now the fun part. Okay, any key factors to control the motion? This is first Q&A here. During trading. Well, it was all the things I talked about, but, I think is recognizing emotion is probably the first thing. I mean, emotion is intrinsic, right? So you can't read your own emotions on the screen. And they can come from a lot of places, right? Like, so I talked about if you don't get enough sleep, you probably feel a little more negative, or if you're hungover or whatever it is that you do, something else is going on in your life. And these things are inevitable. So you got to recognize sometimes what's the market trying to tell you something, or your emotions about the market trying to tell you something, and what's sort of outside of that. And the best thing you can do is live well, and those things will help you live a long life too. But in my routine, I have a cup of tea. I don't drink coffee because I find it gets me too amped up for the market and anxious, which I don't find useful. A cup of tea at 8, cup of tea at 2, and it's the same routine every day. Go to bed at about the same time every day. I don't drink, don't smoke, and it helps. Like, I wouldn't do it if it didn't help. I enjoy some of those things. I enjoy staying up late. It's not 100% true. I never stay up late or anything, but that is life. I have young kids, so that will throw off any sort of routine that you want to have. But those are the things you can control. What you can control. The market will make you feel emotional, and it's unpleasant. Like, a lot of this is just unpleasant. Nobody who's selling you anything wants to tell you that it's unpleasant. And it's like, to make money in markets, in my experience, is deeply, deeply unpleasant and uncomfortable. You're worried, and it's making my hair gray. And I'm not in this I don't intend to be feeling the same way my whole life. But that's sort of where I come from. And I'm on that. Profitable or risk too little on the trade? Yeah, I mean, that's a good question, Elliot. I think that's anybody who's profitable. Like, I would say, and my wife often tells me this, is that, Adam, what bothers you isn't sort of when you were wrong. When I'm wrong, and she's right, it doesn't bother me. I'm wrong and lose money. You lose a lot of money. It's when I'm right and didn't have enough. And that's somehow more annoying in a lot of ways. And maybe I don't have the answer to that just yet, Elliot. I mean, obviously the answer is just lever up a little bit more. Or maybe there's some sort of way to get a little bit more exposure to what you're doing. But that seems like you're close. Like, you're very close to whatever it is that you're getting to. So good luck with that. Winning emotions. Yeah. That's great. I mean, you struggle with them when you throw out profits. Well, I mean, I think I struggle with that too. And on the next question, so it's what's struggling with winning emotions every time you withdraw money. Yeah, and maybe it makes you make a bad decision after that, right? And I think that's a trap that a lot of people have. It's probably just habit. Stick to that, and again, it's just pretty good problems to have. Some of you guys have. Trade management. Key to so the next question from Ahmad. How can I improve trade management, which I find the most challenging part of trading? It involves key decision-making, emotional factors like greed, and balancing risk in real time, testing my discipline and control. Well, that's a good question. Again, I feel that answer about visualizing future pain, visualizing the trade, visualizing everything that's going to go with it. It really is a superpower that will help you in those moments to kind of rebase yourself, say, hey, I knew this was going to be hard. I knew I was going to feel that. And that can also involve those visions of like, I'm going to feel euphoric at different times. And then when you do, you kind of remember that to bring you back to sort of a grounded level as well. Yeah, a live account versus demo to feel the emotions is the next question. I've been demo trading for about 5 months. Yeah, and I don't think there's anything wrong, Daniel, with having a small account. And one of the things I didn't talk about today is I find a lot of value in trading extremely small. There is a lot of confidence that goes along with successful trading, and everybody gets in a rhythm where they have a lot of bad trades in a row and you're losing real money. And to rebuild that, sometimes you just need to trade really small. And even to get your confidence with real money, there's, I think, a lot of like obscenely small trades sometimes just to be like, okay, I'm right again. And you want to make it all back at once when you've lost money. But, if you can hold off on that, that's that revenge trade, right? And say, okay, I just need to be right a few times. There's always going to be another trade in the future. And yes, this is maybe something I've been waiting for a while, and no is right. And then you only end up making a tiny bit of money because you traded so small. Still think that's a good thing. But so, trade small with real money. Demo accounts. It's been so long since I was trading demo accounts, but I think that the advice is right. That it's never the same as real accounts, but always use demo accounts to find out how to trade the mechanics of something. Because the worst thing you can do is be trading things with real money and not understand the leverage involved or the mechanics of what a pip size is or a futures contract size is. And then suddenly find out you have way more on or less on than you thought you did. How much is enough to resign from a day job and doing part-time to transfer? Yeah, I think I can't answer that for the next question. How much? Depends where you live, how much you need, your family, your person, your retirement. Usually it's a lot more than you think. I could probably do it, but even then, like my job goes along with my trading, so it's hard for me to answer that question for you. How common and big is noise in trading? Well, that is such a good one, George. How hard is the noise to deal with? And I think the hardest part of it is recognizing, and I think in your baseline emotion has to be that there's too much negative noise. That the world is a positive place and the noise is all an increasingly negative. Everything that's negative gets amplified, especially in markets. I can write, and I see all the stats on things that we write. If I write like the craziest bearish story, we'll get a lot more traffic. More people will read it. More people will comment on it. If I write something that's optimistic, nobody reads it. But things head in that direction anyway. So people are reading what's counterproductive to what's good. And then there is just so much more noise in general, good and bad, and talk about different things. And I think you need a muscle to recognize that, first of all, nobody knows anything. And so whatever they're writing, like, they're not smarter than you. Maybe they are smarter than you, but they're going to give you anything that's that more valuable than what you didn't already know, especially if you've researched what you're doing. So be careful about the noise. Again, some of that's just experience, but if you stay in the game, you get the experience. Like, that's the message from the whole webinar: stay in the game. On the disc CPI, I don't really understand what you mean by that. I've worked on floor traders, so this is a question. How does it feel to work by yourself? I'm going to get to all the questions here. I know we're a little bit over time. How does it feel to work just by yourself comparing to working on a trading floor with others? Man, I thought people on a trading floor were pretty skittish. I hated watching people blow up, and people get scary when they were blowing up. And, they had to change the locks and stuff like that. I didn't. So that's one of the things I think about when I was on the trading floor. And then you get I think you see the worst of it. I think it's a good thing to maybe do at times, because you do see the worst of people doing really, really dumb things. And so you kind of can learn those lessons about blowing up from others. There's a survivorship bias there, because I wasn't blowing myself up. But you watch a lot of people do it for really dumb ideas, and just see how it wrecks them. And that's sort of instructive in itself. But then now I'm really happy to be alone. But I do find there's a lot of value in chat groups, and I initially didn't think there was. I thought it was stupid. But if you and we have such a good group on Telegram. In our premium group, and it's smart people who are thoughtful, who are in the game for the long haul, and definitely sign up to it. It's not very expensive a month, and it's worth it if you're trading. And we have, it's not too many people in there, it's not too noisy, and I find that's actually pretty useful. So if you can get a good, I guess to apply it to live is, if you can be around a group of good traders, it's only going to help you. How do you deal with the emotion of winning more often? I think I talked about that a little bit before. How to break. Okay, how do you break the habit of throwing your profits back into the market? Yeah, sometimes you just have to slow down. And I think there is always another trade. So like maybe you're rushing into another trade. Overconfidence mentality. Yeah, I think that's also comes with time and experience, and trading with maybe a bit less leverage and to stick around because the market will humble you. Overconfidence, but you do have to have some level of confidence to be, and conviction to be involved in any kind of trade. So it's a very razor's edge. How do I overcome that? Yeah, I need to stick around. When is the right time to scale up our capital? I think it's slowly. I think you never want to be too comfortable, and you shouldn't be, as your account would naturally grow. So, $25 used to keep me up at night. Even it was never really anything to me significant. But I think you know when to scale it up when you can do it and sleep at night. There's your answer, I guess. If you can't sleep at night, you're not ready to scale it up. So if you can move it up and you can still sleep at night, then you're okay. So go with that. Books on trade. Yeah, Alpha Trader. I know Brent. I actually talked to Brent. He wants to work with us on Alpha Trader. Trading in the Zone is another one. Mark Douglas. He died a little while ago, and I was actually spoke with his wife because I was writing about him. That's a really good one. Trading in the Zone. And listen, people who've been trading for a long time, I don't think we talk about fundamentals as much as the market psychology, or I love talking about market psychology. Denise Schull is another one who isn't. She mentors psychologically traders. To Anything by Denise Schull, Schull. Yeah, Peter, I'm not going to talk about this one about AI impacting trading. It's very, very interesting topic, and it will be an effect, and I'm scared of how it might, but the point is the game will change. And I think, people have been working at algos for a long time, and can an AI kind of get beyond that? I'm not sure it can. We got to some of these. Maintaining discipline was our poll winner. Good answers. Yeah, when I'm missing moves when you're at work, that is really tough. I don't have an answer to that. And you got to take longer term positions if you can't watch them, I think. Oh man, I don't know if I'm going to be able to catch up on all these great questions. Next one here is Lane. Oh, nice to have with Lane here. I know the opportunity, the trend, face. Yeah, well, Lane, that's you do the research, you're ready, then you miss the trade, and now you're in a mess of a headspace, and then it goes in your direction, right? And then it goes further, and then maybe you chase, but then you bought the top, and now it goes against you, and you get shaken out, and you're just a mess. Everybody's there. I think the one thing you can comfort is that everybody has been there, and that there is always going to be another trade. And just do it again. You don't have to make like 100 good trades to get anywhere, and you can make a career out of maybe 5 great trades. And try to focus on that. Yeah, David Ezekiel is asking the classic fundamental or technical question. For me, it's fundamentals. Maybe others. There's a zillion ways to make money in markets. There's not just one way. So, I find that the fundamentals, it's great. It's the best way to back test a currency. KJ, thanks for the question. I don't know if I have the answer for that. I don't. Can't help you with that one. I don't think. It's kind of a technical question. What do I say about risk-reward ratio and signals trading? Can we be successful at that? In signals trading, we never get levels where providers are trading. We have to make our trade plan even in signals trading. Yeah, see, a lot of that, you're just listening to the wrong people, I think. There's a lot of people selling things or selling signals that don't work, or you can't get those levels. And I'm just very skeptical of that. So I just do your own work and do your own thinking. Okay, last one here in the Q&A, and then I'll skip over to that webinar chat. What's your advice to FOMO, especially the belief of being too slow or waiting too long? The belief of being too slow. Yeah, again, everybody feels that FOMO, and it's brutal. It's brutal. I mean, I think even this NVIDIA right now, I was down to 90. Now it's like 125 here again today. I think, man, I missed it. Finally got a dip and missed it. Or whatever it is, the yen, right? Like huge opportunity to buy a 142, kind of cleared out the whole year. It seemed like a natural level to get back in the carry trades. You're going to miss a lot of trades, and that's my advice. Just accept it. You're going to miss a lot of trades, and it's painful and it sucks, but just don't do something stupid after. Like, that's the advice, is don't get paranoid, don't get stupid, don't blow up your account. Like, stay in the game. Job is to stay in the game. Man. Okay. Other ones in the webinar track, and I'm just going to go through these really quick because I need to be late, and I'm very happy this is on such a quiet day in the market because not much is happening here. Not much is happening right now. Lack of capital and patience. Lack of capital is a brutal one. I think sometimes it happens slowly and then quickly is all I could say. Like, if you stay in the game, yeah, you're putting in a lot of work. Hopefully you enjoy learning things, and if you're growing it too slowly, I mean, still growing, yeah, you look back and think, wow, I missed out on a lot that I should have made, could have made. And everybody's that way. Like, if you look out at the world of hedge fund returns, supposedly the smartest, best supported people, they're cranking out like 10% a year. That's pretty good for them. And so, you know, it's very hard if you have a lack of capital to grow it to a place where you can get some fundamental trader websites for fundamental. I like using Squawks. I mean, I work with guys that do Squawk because I like it. You know, I used to say Twitter a lot, but I'm very wary of Twitter now, especially never click the For You tab because they're selling doom now. You know, I didn't say, I talked about Zero Hedge in this, but they do have some interesting fundamental articles. But the number one thing I would try to find is actually those research notes. You know, they're thoughtful, they're a little bit dry, but you have to be able to do the work to go with that. Okay, I think I'm gonna wrap it up there. So anyway, thanks so much to everyone for coming. Sorry if I didn't get to any all of the questions, but it's been a pleasure. I love talking about markets, and it actually makes me feel, you know, someone did ask about trading alone and all that, but it is nice to feel people listening and responding and talking. So thanks so much to anyone to come out. I don't want to keep anyone any longer than you need. There's a lot to think about. For this one about research notes, like I'm talking about like bank research on either the economy or single stocks or trading. Like I struggle to think of how to anything written by, like, you know, whatever is Goldman Sachs or Deutsche Bank or whatever local banks you might have, or, you know, there's hundreds of them around the world, and you can get your hands on those notes. We published a lot of the details of some of them, but they're pretty useful. Hey, it's been a real pleasure, and look forward to doing more of these. You know, we're gonna get more into like I'd like to do some more hardcore fundamental ones. We'll talk about, like, just take the end, talk about what's happened, why it's happening, what I think could happen, and how I'm thinking about different things. So appreciate all that. And listen, thanks everyone for coming, and I'll get back to just typing things up on Forex Live instead of talking here. But yeah, thanks everyone for coming. You can always hit me up at, you know, usually at Forex Live on Twitter works, or you know, you send us in the contact us, or even comment on stories. I oftentimes get to that. All right, everyone, thanks a lot. Take care.